Hey everybody, it's Aaron Norris with the Norris Group. It is Friday, September 9th, and this is episode 321. Did you know Disneyland is messing with some of their real estate? That and much more as we cover the biggest headlines in real estate. You do not want to miss the radio show and podcast this week as we lead up to I Survive Real Estate. Still a handful of tickets left. If you're interested in going, check out isurviverealestate.com for that. We are sold out as far as sponsorships goes. But this week, we've got Peter Moyo. He's the chief economist of 10X, talking about all things commercial. You know them as auction.com, more of the residential side, but they're also in the commercial market. You'll hear that about a lot more about commercial this weekend on the radio show. First, some quick headlines. CoreLogic reported home prices increased 1.1% month over month and 6% year over year in July. And the labor market reported vacancies in the job market increased to their highest on record at 5.87 million. A recent study by Lori Goodman with the Housing Finance Policy Center shows that women pay a little bit more for mortgages than their counterparts. Although they have statistically been better on repayment performance, women appear to be weaker in the credit characteristics during the application phase. So that's what appears to be driving up costs for single women acquiring loans, but how do you fix it? Do you make it blind going into the application? They can't tell if you're a man or a woman. Sometimes they do that in HR departments. So it'll be interesting to see if any actionable items comes from this report. Fannie Mae released their latest home purchase sentiment index, which decreased 1.5 points, but overall continues to show promise. The slight dip was led mainly by consumers answering the questions if it was a good time to sell and the likelihood that real estate prices were going to continue to increase. Doug Duncan says overall it looks good, and of course he's going to be on our panel again at I Survive Real Estate coming up October 21st. Always a good time to have him, one of our favorites, so you don't want to miss it, isurviverealestate.com. According to a recent study by Coldwell Banker, California is home to the top 10 most expensive real estate markets, and that's a little surprising considering states like New York. Saratoga took the top spot with the average cost of a home around $2.5 million, followed by Newport Beach, Cupertino, and Redwood City. The least expensive markets is topped by Detroit, with the average cost of a home being $64,000, followed by Cleveland, Park Forest, Illinois, and Jamestown, New York. The Federal Reserve reported slight growth in the U.S. economy despite some inflation. The job market remained tight overall, but hiring slowed in August. Wage growth was flat to strong depending on where you're located, and investors just aren't sure what the Feds are going to do with the interest rate, and all games are off until after the November election, so we're just going to have to wait to see, okay? Disneyland is working on more of its real estate. Star Wars fans just had a complete meltdown in 2015 when Star Wars Land was announced, and they're replacing it and squeezing it into former pieces of Frontierland. Now we get word that the Tower of Terror at California's Disney Adventure will close January 2nd. It makes room for a Marvel Comics themed experience called Guardians of the Galaxy based on the movie. And what's interesting about this is Florida, they can't do that because there's a deal between Marvel and Universal Studios. So California might have something unique and more of a reason for people to come and visit California. But what are we going to do with Tomorrowland? Because it's not looking so tomorrow these days. What would you put in Tomorrowland now that you know that Star Wars Land is going over there and California Adventure is getting Marvel Land? What are they going to do with Tomorrowland? I want to hear your ideas. If you're on YouTube, please leave a comment below and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video. And if we miss something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. Hopefully we'll catch you at one of our upcoming events, September 20th, the Apartment Owners Association's $1 Million Trade Show and Landlording Conference at the LA Convention Center. September 21st, we'll be doing Stay Put, Cash Out, or Change Seats. One of the last times we're going to be doing this in, I think September is the last month that we're doing this. So you'll catch us in Irvine on the 21st. On the 28th, we'll be in Glendale, and we're going to be doing that same talk with Women's Invest Club and Robert Hall and Associates. October 6th, we'll be up in Northern California at SJREI in San Jose. October 8th, Cashing In on a Boom. This is the event that sold out in February of this year, and the last time we were doing it in California at all in 2016. You have to be a member, but it's inexpensive and unlocks our entire portal of information, which is awesome, with newsletters and discounts and all kinds of fun stuff. And then, of course, October 21st is I Survive Real Estate. We are just about sold out. isurviverealestate.com for more information on that. For more information about events and hard money loans, including our fix and flip, buy and hold, and new construction loans, check out thenorrisgroup.com. We've got programs starting at just 6.9%, which is awesome. Or if you want more information about passive investing with trust deeds, check out tngtrustdeeds.com. We have a fantastic book that you should read, and it makes it really easy to understand how we work and the joys of passive investing with trust deeds. With that, have a fantastic weekend, and we will see you next week.